On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.
Hi traders, welcome to another trading webinar with me, John, Senior Market Analyst here at Anzo Capital. I feel like it's been a while since I've done one of these on my own. The last webinar we did was with Lindsay and we talked about the debate between technicals versus fundamentals. But today we're going to talk about the ultimate swing trading checklist. We're going to talk about what it is and what it takes to become a little bit more of a swing trader. Now, don't get me wrong. The popular route for this is to become a day trader. But when you are first starting out as a trader, trying to day trade can be very difficult because there can be lots of sort of whipsawing effects in the markets. You may not truly understand how the market mechanics work yet, but you're diving straight in because you want to explore what price moves on a lower level. You want to explore trying to gain some capital and you want to make some profits, right? So, and that's the crux of it. You want to try and make some profit. Now, I have a lot of experience with day trading. I used to day trade Euro futures and I did that quite successfully. The problem I had with it was it takes up a lot of focus and it can be extreme focus in some cases, especially when you're dealing with sort of volume profiles, market profiles, order flow, all that kind of stuff. And if you don't necessarily know what you're looking for from a day-to-day, it can be quite tricky. Also, I just found it takes a lot of time away for me personally. And I found myself kind of sitting in areas where I shouldn't be sitting in terms of I was, meant to be trading the US session, Euro futures on the US session, but I'd find myself trying to trade the London Open. I'd try and trade pretty much all day. And that's not necessarily how trading works, especially if you want to be a day trader. So I shifted my focus a little bit. I also was, at the time I built a currency strength meter and that didn't really kind of flow in with the day trading side of things and trading Euro futures. So I thought I'd take a step back, start swing trading, and just felt natural. It felt natural to me to be a swing trader. I felt a lot more calmer when it came to trading the market. I felt like I had time to think through my decisions as well. So to me, swing trading is predominantly what I do. Can I day trade? Yes, everything is kind of fractal in my opinion, but I prefer swing trading. It's just a personal preference. So today I'm going to reveal to you how I swing trade the markets. And at the end of today's session, you will get access to the 4-step trading blueprint, which is going to be a giveaway for you after the webinar. So what does this entail, the 4-step swing trading blueprint? Well, I'm just going to give you a quick snip of this because these are the stuff we're going to be talking about today. I'm going to show you exactly how you can work your way through this checklist so you understand everything that's going on. So, and it kind of blends in with my method. If you've seen what I've done before, I talk about this method called the WCF method. Essentially, it's why the markets move, what the conditions of that market is, and can it, or is it in the right condition to then deploy a strategy? That's it. So when I look at the 4-step swing trading blueprint, the 4 steps are these. The first one is market selection. And I think that from a swing trading case anyway, this can be quite a difficult thing to do if you don't understand the mechanics of the markets, you don't understand certain things. You can be like I was back in the day, scrolling through every single currency pair or commodity or indice just to try and find a trended market. But I think the thing is, it's all about kind of like, why do you want to be in that market in the first place? On a day trader side of thing, you kind of stick to 1 or 2 pairs, or you kind of stick to a commodity like gold, or you try and trade the NASDAQ or the S&P 500. So market selection is already kind of done for you in that sense. But when it comes to swing trading, you have a lot more options available to you to trade. You have a lot more sort of markets to be able to trade. So it's a good thing to try and narrow that down somehow, give yourself some kind of focus. So that's what I'm going to be talking about today. I'm going to take you through the currency strength analysis as well, and point you to in the right direction there. And then you can obviously, a big part of what I do is use kind of macro analysis as well. So I can show you a couple of little bits about that as well today. Now, the second step is to identify the conditions. What are the right trading conditions for the market? And that comes in step 2 and step 3. So what we're going to be doing here is identifying a trend. How do you identify a trend? What are the characteristics of a trend? And what are the phases within that trend that you can try and trade? Then we're going to look at the zone identification. Okay, so that's just basically how to apply good areas of support and resistance. Really speaking, this is probably one of the most easiest parts of it all, because it's quite clear to see support and resistance on a chart, right? So that's going to be easy to go through. And then the last one is going to be execution. Can you confirm on your checklist certain elements to be able to take an actual trade? Okay, because the thing that we're going to try and do is make ourselves efficient. We want to be putting on the best possible trades. Are they going to lose? Yes. Okay. Some of them will lose. But the idea is to try and negate those losses as much as possible by putting yourself in a better position anyway. So let's crack on. Let's start with the first thing. The first thing is how to identify what currency pair to trade in the first place. And there's a few different ways that we can do this. Okay. And some of my favorite ways to do this is to look at the macro picture, look at seasonals, look at the commitment to trade reports, so that's sentiment data, and look at currency strength and weakness. Now, the easiest of these is currency strength and weakness, right? So this is a tool that I built. I'm just going to put it onto a light screen so you can see it against the background. But this is a tool that I built called the currency strength meter. Okay. And there are various different ones of these already out there. This isn't like reinventing the wheel or anything like that. There are multiple currency strength meters out there. I just find that a lot of the ones out there go on percentage change rather than physical sort of changes in price. Okay. And this is what this one does. So the currency strength meter basically is built on trend. Okay. So what happens is, if let's say euro US dollar is making an upward trend, we would give the euro a score of 1 and the US dollar a score of 0, because it means that the euro is stronger than the US dollar. And then we take all of the 28 Forex pairs and we calculate what the trends are doing on each of those currency pairs. And then it gives us some information. So at the moment, it's telling me, as of last week anyway, the strongest currency was the US dollar and the weakest currency was the Australian dollar, as well as the Swiss franc. So immediately when you look at this box here, it gives me some options, right? I know that the dollar's a little bit stronger. I know that pound's a little bit stronger. Yen has been a little bit stronger. So those could be potential ideas to buy this week, right? Straight away. And then when I look at down here, I've got New Zealand dollars weaker, Aussie's weaker, Swiss is weaker. Okay. So those are the currency pairs that I can potentially sell. So from that information there, if I go down to my trade signal list, you can see I have a number of Forex pairs here ready to potentially trade. Okay. Immediately. So I can look at what is strong against weak. So potentially we could look at a pound Aussie long situation. I have also put in a reversal watch as well, just because the currency strength meter shows extremes, and the pound is at an extreme, Aussie's at an extreme. But really speaking, pound Aussie, pound Kiwi, potentially good buying opportunities. So let me just quickly go to a pound Aussie chart. I don't know where the chart is this week because I've not really looked at it. Okay, great. So what can we see? We can see that the price has recently been in a downward trend, really strong downward trend. I have been selling pound Oz earlier in the year, and the market is now making a new change in trend. Okay, so we've got a head and shoulders pattern really here. So we've got the head, we've got the left shoulder, we've got the right shoulder here. Market has broken out of that. So really speaking, the market is now making a new higher high. We have a higher low here. And are we going to get a new higher low? That is the question. So this is kind of like a perfect example we could go through today on taking a potential trade on pound Aussie. Okay. But the point of the checklist here, if I could just bring that back in, is we want to be narrowing down our list of options. Okay. So like I said, we have pound Aussie at the top of our chart. We should be potentially going long pound Aussie. So once the market has, once the currency strength meter has shown me this, it's like, okay, great. It's given me an idea to potentially go look at that chart now. So before we even looked at what that price action was doing then, I was looking at potentially going long. We've got some other here listed as well. Now, yen pairs I'm very, very interested in because we have additional information. What is that additional information? So first of all, if we go over to something called an interest rate probability tracker, this is something that I really want to try and emphasize. FX markets move on interest rate expectations, plain and simple. It comes down to inflation and employment because that is a central bank's mandate. They need to basically their mandate is full employment and price stability, right? And that's where inflation comes in. They don't want inflation going too aggressively outpacing wages. So what they'll do in that sense, they will hike interest rates from what we've seen in like 2022 and maybe even the current conditions now. And in that situation, a currency can get stronger. On the flip side of that, let's say inflation is below 2 to 3%. You also have a situation where employment is increasing. So unemployment, is increasing to above 5%. Then that tells us that an economy is not doing that great. So the likelihood is that we're going to see a decrease in interest rates. That is negative for a currency. Okay, so it's really super important to identify what could potentially happen in the kind of macro elements, because essentially that's how FX markets are run. So when we look at this here, we can see that we've got the Federal Reserve. We're looking at, they can be a little bit more hawkish, but I'm looking at this kind of table here, right? So you've got the Fed, you've got ECB, Bank of England, Bank of Japan, Swiss National Bank, RBA, RBNZ. And you can see here, look, there's a potential for the RBNZ to hike interest rates. That is typically bullish for a currency, okay? So when the currency strength meter told me that the New Zealand dollar is kind of weaker, well, when I look at what the central bank's planning to do, there's a potential for a hike, okay? And it's a 69.7% probability that that's going to happen. So I might not want to be selling the Kiwi dollar because of this in here. But again, it gives us some ideas. We want to be basically looking at ones that are hiking, ones that are a little bit more dovish. Now, the Bank of Canada, a little bit more dovish. They have been looking to potentially cut interest rates. So I really want to be selling the Canadian dollar versus a stronger currency. But to keep it simple, here's a good map of that, right? Another thing you could look at is something called the commitment of trader reports, or sentiment analysis. So the commitment of traders report is a report that is released every single week, and it tells us the futures positioning of participants, right? So those participants are known as the non-commercials, or you can kind of call them large speculators. You've got the commercials, who are businesses, and they're basically kind of hedging their future sort of costs. And then you've got non-reportables. Now, non-reportables are big enough that they have to report, but essentially they're almost like what you would call retail, kind of like small, very small speculators, right? And what happens here is that we can get a report of how those certain participants are positioned in the markets. And you can often find that when you see what's known as an extreme in positioning, which basically means that the trade is too crowded, that you can see a sharp reversal. So a good example of that at the moment is the Japanese yen. So this is yen futures, okay? So when you look at this chart in a minute, you'll probably be, I don't know if you'll understand this too much, but this is the yen futures chart, okay, which is the inverse of dollar yen. Okay, so just keep that in mind. It's the inverse of dollar yen. So when you look at a dollar yen chart right now, it's kind of hovering around that 160 spot 50 handle. That's this level here. Okay, so it's just the inverse. Just keep that in mind when you think about that. So what do we have here? This is a weekly chart of the Japanese yen futures. Okay, I'm just going to change a couple of things here. What I want to see down here is the 18-month non-commercial index. And then I'm going to look down here where we have the COP positions, and I want to change that to non-com positions. Okay, so that's the large speculators in the market. Now, what I'm going to show you is short contracts on the yen futures have reached an extreme level. Okay, if we look at the previous levels here, it's higher than these kind of peaks that we saw a sharp reversal in price in the past. And if I zoom all the way back here, so we're going all the way back beyond 2008. Okay, so short contracts are even higher than sort of 2007 levels, right? Which is absolutely insane. Okay, so think about that in itself. We had a very sharp sort of bullish movement in that Japanese yen, and short contracts weren't even at this extreme positioning that we're seeing now. So again, that gives you an idea of where to potentially trade. For me, this means that I don't necessarily want to be selling Japanese yen. I want to be buying Japanese yen. And when I look at the currency strength meter, it says that the Japanese yen is at +3 and has been getting stronger. So immediately I'm looking at this table thinking Japanese yen for me is one that I really want to try and buy. I want to potentially sell it against the New Zealand dollar, the Aussie dollar, and the Swiss franc. Okay, immediately. So when I go look at those now, we can start looking at sort of the conditions in the market. Okay, so look at Kiwi yen, for instance. Market has, dropped a little bit low, a little bit more choppy than the other market there that we were just looking at on pound Aussie. But you can see aggressive selling coming in, slow pullback. Could this be a potential swing trade and opportunity on a potential sort of retest of these highs, or a little bit of a breakout to the downside? Potentially. Let's look at the Swiss yen. Swiss yen a little bit more choppy, a bit more complicated, the Swiss yen, because obviously the Swiss is also a safe haven asset. So really speaking, we can see we're in a bit more of kind of like a choppy thing here, but that's good because the next section of the watch list is looking at the conditions of the market, and the conditions here don't look as good to me as New Zealand yen. We'll just have a quick look at where Aussie yen is. Yeah, Aussie yen I like a lot. We can see it's kind of trying to break out of these different areas here. I've not done any analysis on Aussie yen for a minute. I've been focused a lot on dollar yen, but you can see that we had a really nice sort of triangle pattern forming. Price has then broken down through that, looks to potentially create a lower high for a move down to 150, perhaps even to 109. So immediately we've, just by using the checklist, right? Let's bring that back in. We've looked at our currency strength analysis, okay? We've looked at it and we've found that the Australian dollar is a weaker currency. The Japanese yen is a stronger currency. Pound is a stronger currency. So we've run that analysis. It's give us some options in terms of markets to potentially trade, okay? So now we can move on to identifying the condition of that market. Okay, so let's go back to pound Aussie, because pound Aussie is a market we potentially want to participate in and want to potentially buy. Now, there's a couple of things that we need to kind of discuss before we go into this analysis here, where we want to potentially buy pound Aussie. First of all, it's understanding market conditions. Okay, so you have what's known as an upward trend, where we have a high, higher high, and whoops, that's meant to be a higher low. And what we are looking for essentially is to buy when the market turns from a higher low to a higher high. That's essentially what we want to be. I want to be a buyer on the higher low. Okay. And there's a way that we can do this, which gives us a little bit more of a efficient method to do it. Now, I like to give these titles, right? So the longer part of the trend, I like to give P1. Okay, it just means phase one. On the shorter parts of the trend, I like to call it P2, phase two. You can call it a retracement phase, impulse phase, things like that. I was just taught to call it a P2. Now, what this basically means is that if this higher time frame, so let's look at this daily chart here of pound Aussie, this section here, right, is where we want to kind of do business with the market. On the pullback, we want to be sitting and waiting. I want to trade when a P2 turns back into a P1. And how that looks is on a lower time frame, you'll get a downward trend and then a breakout of that. So when I'm looking at this here, just to kind of map that out for you, let's say P1, P2, P1, P2, right? Let's look at that on an hourly chart, for instance, and zoom out, okay? Boom, look at that. You can see that in the phase one of the move, what is the market doing? It goes from making lower highs and lower lows to making higher highs and higher lows, right? What happens is it changes condition. Market then starts to make lower highs and lower lows, which basically means that we are in a P2. So what do we want to do? We want to make sure that we're going back with trend. So there's a couple of ways that we can do this. We want to wait for that change of structure again. We want to see that the market is making higher highs, higher lows on this hourly chart so that we can potentially catch that P2 move on the daily chart going into that P1. Okay, so pound Aussie to me is a good buying opportunity at the moment because we've got the currency strength meter saying that pound is stronger than the Australian dollar. We can see that the market is making higher highs and higher lows here on the daily chart. It's broken through this kind of area of resistance as well, that 189.50. So I potentially want to go long in this market. So the next part is to build the strategy. What is the strategy that takes us in and around this area? I'm going to skip over zone. I think like everybody knows how to draw sort of support and resistance on the charts. And I think everyone's kind of mapped out with that. But what I want to focus on is how do we take the trade? How do we get into that? And I think this is the big sticking point of a lot of people's trading is how do I get involved with what's going on? So like I just said to you before, I wait for breaks in kind of trend and structure. You can either look at the 4-hour chart or the 1-hour chart. I predominantly use the 4-hour chart, but you can use the 1-hour as well. And what I'm looking for is really clean breakout in the chart. So we can see that the market has made a new higher high here. So now I'm looking for a trend idea. So I also use a 200 moving average, okay, because we can often see that when it's in the pullback phase, we get a little bit of a kind of consolidation in the moving averages, sometimes even a crossover. When that crossover occurs, you can see the market bounces from that. I also like to use a stochastic oscillator as well, just to kind of show us a little bit of momentum here. But like I can show you here, that would have been a good trade idea. This would have been a good trade idea here as well. So from that phase one move. So I'm looking for something similar again. We can see that the market has now made a new higher high on the 1-hour chart. So I'm looking to see, can price break, give me that little bit of stochastic oscillator move in here, close back above the 50 moving average, because then I'll look to take a buy order with my stop loss below the swing lows, looking to try and target at least a 2-to-1 risk reward ratio. Okay, so let's focus back here a little bit. Now you could have took a couple of early trades on this one because the market formed a higher high, higher low pattern, came in, okay, and you can see, look at these little sort of miniature highs in there. As soon as that gets taken out, you know, that would have been a good area to start buying the market. Stop loss below the low, target a 2-to-1 risk reward ratio. Here, I like a lot. Market is breaking higher. It's pulling back. You can see there's kind of a bit of a sort of support base coming on here where you have this previous high as resistance and now potentially turning into support. You got the moving averages pointing up. You got the stochastic in that oversold condition there. And then what I would look to do is put a buy stop above that candlestick high that gives us the move, right? So you can see the stochastic oscillator comes back above 20. It's this candlestick here. I would put a buy stop order above that candlestick high. Stop losses, you can either put below the 200 moving average or below the previous swing low. I like below the previous area because it gives you a bit more room to breathe, and you can use things like ATR and stuff. And if we look at a 2-hour trade there, easily done. Okay. Second trade as well. I quite like the market is making a little bit of a pullback there. It comes back in. This nice bullish engulfing candle could have been our trigger candle. We could put a buy stop order above that swing high. In this case, look at the moving averages. It's quite open at this point. Sensible stop below the 200 moving average or below that swing low just in there. 200 moving average, I think, would be fine on this particular move. Look to target at least a 2-to-1 risk to reward. And we may have just got it. If not, trailing stops would have been taken out below the previous swing point. So that is how we're going to be able to kind of take advantage of a market, is by breaking it down with that 3-step method. Okay. And this is where we want to be doing with business with the market. When the market turns from that phase 2 into that phase 1, and we want to be trying to buy on that trend. Okay. We can look at some examples back here as well, because I was trading pound Oz earlier in the year. And the reason being was because the RBA were hiking interest rates because inflation was moving so much higher. So they were hiking interest rates. The BOE, on the other hand, were doing nothing. So you had a central bank which was neutral. You had the RBA hiking interest rates. And you can see I've just drawn some breakout opportunities in here. And that's how I was taking trades through this whole downward trend here. It doesn't have to be anything super, super fancy. You know, you could look at the sort of breakouts in that trend, just kind of, again, what is that showing me? It's showing me that the P2 is turning back into the P1. Okay. And that's exactly what we want to try and take advantage of. So let's walk through a couple of scenarios. Okay. Let's walk through a couple of live ones. So pound Aussie, I like a lot. This is a live scenario right now. I'm waiting for a nice little breakout on the hourly chart to give me an opportunity to buy pound Aussie. If I look at the sort of support and resistance levels, we have the previous swing highs as a potential target 1. Target 2 would be up towards this 1.93 handle. You can see there's a lot of aggressive selling coming from here. So I'm looking for that potential move on pound Aussie. Let's go back then and check out the currency strength meter. I also want to put a little bit of a, let's put this side by side. Okay. Pop that there. Pop that there. Zoom out a little bit. Okay. So this is what you can do on a daily basis. Okay. Or at least try and do this once a week, right? Give yourself a checklist to go through. So the first thing you want to do is, again, find the why. You know, why is something going to potentially move? You may even be able to look at an event that's coming up, right? So this week we have a lot of data coming out, right? Big events. We've got the next event we've got is the retail sales out of the US, and that's coming up in an hour or so. If we take a look at the big event of the day, really, it's going to be the FOMC interest rate decision. Now, obviously, they're expected to hold at 3.75%. But what's really important is the 7:30 press conference after, because this is going to be the new Fed Chair Warsh's first sort of FOMC economic meeting. So to me, that is a big risk event. But that can give you your why. Why do I want to get involved with the market? Well, there's going to be a big event coming up tonight. So you want to be looking at potentially positioning yourself either ahead of it or waiting for the reaction and doing something with it. But either way, you've got to start by looking at having a bit more of a plan in place. So how would that look? One of my favorite things to do is just look at what is happening in the market, right? What is going on in terms of the macro picture. Now, one of the big macro stories at the moment is geopolitical. Okay, so you've got here US President Trump says Iran MOU is not final in reference to the 60-day negotiating period. If we do not like what we'll see, we will strike again. That is against the narrative that we've been seeing at the moment, and oil prices are probably tracking a little bit higher because of it. Yes, okay. But if we take a look at what's been happening in terms of the macro story, right? This is oil. there was a potential announcement of a deal here, okay, back on the 1st of June. And then we have Trump stating the Hummers is open with no fees yesterday, okay. Monday. And look what happened to price. Price dove lower. Now, if you understand that the geopolitical pull is pulling on these markets right now, then you'll understand that that could be a trading opportunity for you. So look, big move to the downside. This is a 30-minute time frame now. We're looking at lower time frame. This is going to be almost like day trading movements, right? And you can look for those opportunities where price pulls back and breaks out again. So you could either look at a breakout of the previous session's low. So this would have been a nice trade in here. You could use the 50-200 moving average with a stochastic sort of move up into the overbought section here. But that would have been pre-trading hours, really, or it would have been over the Asia session anyway. So that might have been a bit more of a difficult trade to take. But, you know, looking at that kind of breakout there, that would have been a good option to take because of the geopolitical news that has been happening recently. Now, obviously, Trump is going back with his rhetoric and he's talking about sort of, you know, what's going on in terms of the going back on this 60-day negotiation thing that he's on about, the 60-day ceasefire, and it's putting pressure on the market. Okay. What has been happening with gold recently? Okay. Gold has been driving lower. Why has gold been driving lower? Really simple. It's to do with inflation expectations. Yes, gold is a geopolitical sort of driver. It has a safe haven element to it. But in times of uncertainty, and we often see sort of, especially if in times of uncertain inflation periods where inflation can or is expected to go out of hands because of the supply shock that we had in the oil, then gold can suffer because of that. And a real simple thing to do, we can put on the US 2-year yields. I'm going to put it on a new pane here. It's going to bump that up a little bit. And what we're looking at is the US 2-year yields versus gold price on the daily chart. And what you'll see is US 2-year yields have been climbing. So what this is telling me is that bond traders are expecting the central bank to potentially hike interest rates, okay? Because they're pricing in that there's going to be more yield, right? So they are buying bond yields, essentially, okay? Or they're buying bonds. We can see that the market of gold is selling off because of that. Okay, so we need to keep an eye on inflation because inflation drives yields. Yields can have an impact on gold. Okay, there are certain times where the correlation is pretty similar, but it's only in very, very rare situations that you do that. I mean, look at this: bond yields, US 2-year yields, essentially diving lower for how long? Since November of 2023, really, it's been on a downward trend. Look at the spike in gold. Okay, so you want to be looking at what's happening on your yield market as well. But again, this gives you the why, and that's what I want to try and get the point of today is looking at the why first before getting involved with the particular market. You know, there's something that I'm looking at the moment when it comes to seasonals as well. US dollar index. There we go. Seasonals as well. I love looking at seasonal analysis. I think it's one of the most underrated things that you can do. One of my favorite traders of all time, Larry Williams, talks about seasonal analysis in markets, and I just think it's a great tool to use. I'm using the Markets Made Clear platform here. What I'm going to do is just pop on the midterm election year, which is the year that we're in now. We have a 73% correlation with that. We've actually got a 74% correlation with all years as well. So that's all the years that we have compiled into this data here. So it goes back to 1987. Okay. And look what happens usually to the US dollar around this time of year. Okay, we actually usually see the dollar become bearish between June to August, a little bit of a bounce in August, and then from the middle of August down to October before seeing a bounce, before seeing a continuation lower. So really speaking, correlation of this year correlated with all years is quite strong, quite strong. Again, this gives you an idea of what to potentially do. So when we're looking at step one, what is the why? A why could be, oh, well, dollar has a potential seasonal play here where it becomes weaker. Okay, well, what do we need to then see in terms of the conditions for that? Well, I need to see dollar forming a downward trend. What is the dollar index doing at the moment? It's actually bullish. Market is making higher highs and higher lows. So that trade idea is not going to work out. Okay, you can't just come to the chart and sell it. What we need to see is a potential sort of double top pattern, a new lower low being formed, and then a lower high, and then action those moves to the downside. Okay, we might even see one more push up into the 100 spot 50 area, these kind of key swing highs, and then see a move down, because let's face it, the dollar index has basically been sideways for a long period of time, so 2025, April 2025. So we've kind of been in this sort of sideways movement here. So that's kind of an idea of how you can use the checklist to avoid taking unnecessary positions in the market. Okay. But if we think about what we did on Pound Aussie is the perfect example of what we were going through here. This is where the stars kind of align up really, really nicely. First of all, we have the currency strength meter telling us to buy pound, sell Australian dollars. Fantastic. That's number one on our checklist. Done. Okay, so buy pound Aussie. Second is, does the conditions match up to buy pound Aussie? Well, yes, we've just seen that here. Market is making higher highs and higher lows. Perfect. What do we need to do now? Need to apply a trend-based strategy. So I'm looking to see, can pound Aussie be bought from here with the markets heading back up to that sort of 1.91 handle, or even higher towards 1.93? I need to wait for the strategy setup, which is the market needs to make new higher highs, higher lows, and then it needs to kind of bounce off that 50 moving average, bounce off the 200 moving average, and give me that stochastic in that oversold condition. Really simple. So that's how you can put in this kind of ultimate swing trading sort of toolkit in practice. Okay, try and find the why first. I think it's super important. I don't think enough retail traders do this. Find the why first. Why could a market move? Think about it like this, right? Let's say a really simple why. Oil prices are moving higher. Just think to yourself, what does that impact? One, it could impact inflation. Think of it, maybe if you want to look at it in terms of stocks, you could say, well, what does higher fuel prices mean for transport costs? Well, that means it's going to be higher transport costs. What industries are going to be impacted by higher fuel prices? Maybe you could look at airlines, right? So there's really simple connections that you can do in the market just like that. So if we look at, I'm going to look at a popular one in the UK here because, it is just a popular one, which is Ryanair, right? And Ryanair prices have been coming down recently. And if I just overlay, let's just put in Brent crude oil, and I'm just going to put that on a new pane. Okay, you can see the correlation between oil prices starting to rise, okay, which is sort of from here, right? And the downside that you've seen in stocks like air stocks, right? So start thinking about the why. Start thinking about the why, and then start applying a strategy. So you could have said, okay, well, that's the why. What's happening here? The market is making lower lows and lower highs. How do I take advantage of that break of that 50 moving average? Retest the 50 moving average. Could have sold some options maybe on these stocks, or if you have the CFD equivalent, you could have sold the stock. So that's what I'm trying to kind of get you to think about when it comes to the ultimate swing trading checklist. And then it's about applying those key kind of technical elements that you will already know. And then it's about applying a strategy. Okay. So think about that the next time you go to open a chart. We'll be releasing that checklist for you so you can download that. But I'm going to leave it there. Thank you for joining me today. Really appreciate it. And I hope you have a great rest of your trading week.
On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.